Today we're basically going to do some calculations. We're just going to look at investment in index funds. A lot of people have been asking me about investing in an index fund like the S&P 500, for example. So I'm gonna do this differently today. So I won't even be showing my face. We're going straight to my calculator. I just want to show you what kind of investments should you expect when you are investing in an index fund like the S&P 500, for example. That's the main one that people want to invest into, and that's the basically the focus of the video. S&P 500. How much returns would you get when you're investing in the S&P 500, and different amounts? So we're going to be looking at $100, $200, and $500. The reason being, most people usually are very consistent with investing these amounts of money. So for those who may not know, an index fund is basically a fund, a mutual fund, or an exchange-traded fund that tracks an underlying asset of an index. So, for example, let's use the S&P 500. S&P 500, which is the Standard & Poor's 500, is the 500 topmost companies in the US based on market capitalization. So, an index has been formed, that's a financial term, has been formed to track some large 500 companies in the US, basically that contains the large 500 companies in the US. So what an index fund does is that it just tracks or mimics the performance of that index. It just mimics the same portfolio that an index has, and therefore it becomes an index fund. So for index funds, basically, they just track the performance of the index. So for the S&P 500, if you are investing in an S&P 500 index fund, you will find that it's just tracking the 500 topmost companies in the US. So how much can you actually make if you are investing in the S&P 500? And we're just going to do a few assumptions here. Number one assumption is that you're going to be very consistent for this period of time. Number two is that the market is going to perform in a certain way for a period of time. And number three is that the market will still continue performing the way it has performed historically. So then let's look at it. So if you were to invest $100, which is in Kenya, for example, that's around 11,000 to 12,000 Kenya shillings now, based on the rates. Usually it's 10,000 Kenya shillings. And like I say, always long-term thinking. So if you want to invest for retirement, for example, let's look at 25 years. Let's look at a return of like 10%. And compounded annually with a contribution of 100 every single month. In 25 years, you'd end up with $124,415. Total interest would be 94,000, free money 94,000. Your contribution is only 30,000, and that's what matters. So with $100 contributed every single month for 25 years, you end up with that much, and that would be around more than 13-14 million Kenya shillings if you're in Kenya, for example. But look at the interest. Okay, so the interest is amazing, and you can see how it has performed and how it's going all the way to that amount. If you come back and change that amount, and we're also assuming that you didn't have any savings when you're starting, so you're starting afresh. So with 200, let's see how much you end up with. You end up with 248,831. That is way more than 26 million Kenya shillings with only $200 invested every single month. If you change that amount to 500, we are looking at 622,000. That's more than $500,000. So you can see what matters is the time. What matters is the time. Let me show you something again. If you were to reduce the time to, let's say, by just 5 years, and do it for 20 years, you'll see the big difference. It's almost half. So you remove just 5 years from the calculation, and the compounded return goes to almost half. Okay, that tells you that what is important when it comes to investing is time, not even amount. It's just time. So even with 100 that we used first, if you were to increase time considerably, like 40 years, so let's say you're 20, you're just starting to work, you start investing just 10,000 Kenya shillings or $100 monthly for 40 years, you still end up with more than $500,000. Investing $100 should be very simple. Very simple. Again, if we do 200 for the same period of time, you end up with over $1 million. So $200 only, which is just 20,000 Kenya shillings, invested consistently for 40 years would make you a dollar millionaire. You don't have to do anything else. You've never invested in anything else. All you've done is save 20,000 Kenya shillings. You still end up with $1.1 million. That is very good. In Kenya, that is over 100 million plus. Now, if you were to do that with 500, let's look at that. You are almost $3 million, $2.7 million, just short of $3 million. So you can see, and if you were to just add 2 years here on the time, you're more than $3 million. You just added 2 years, only 2. Anyway, so if you had reduced time to the 30 years, you see the reduction to 1 million. So it's about time. It's not about amount. However little you are contributing, be consistent. Look at it in the long-term view. Whatever you are investing in, be it real estate, be it stocks, be it business, you always have to give it time. Otherwise, today I was just going to show you how much you can make with the S&P 500 while you're investing just like something like $100 or $200 for a period of time. So you've seen the different scenarios. 30 years, you'll have 208,000. That's way more than 22 million. So I hope that's just a reminder that you need to start investing. That's it. You just need to start. It doesn't matter where you're starting. This video is meant to be very short. Start now and see the returns compound, and you will hit your financial goals. Don't complain about how much you have. Otherwise, guys, see you next time. Let me know if this is really motivating you to start investing immediately.